made over $750,000 last year trading, and I only traded 1 hour per day. And in this video, I'm going to show you the exact strategies that I use, step by step. I'm going to show you the specific setups, the exact time frames, and real trade examples that made this possible. This is the only strategy I trade, and if you're serious about becoming a profitable trader in 2026 without sacrificing your entire day, this is the only video that you need to watch. Let's get into it. So who am I and why should you listen to me? My name is RP and I've been trading for over 6.5 years. I learned this strategy from my godfather, who spent 30 years trading at Goldman Sachs before he retired. He taught me how institutions think, how they move money, and most importantly, where they look for liquidity. And once I understood that, everything about my trading changed dramatically. See, most retail traders are trying to predict where price is going to go. They're using indicators, they're drawing trend lines, they're looking for candlestick patterns. But institutions, hedge funds, banks are not predicting. They are following the money. They're looking at key liquidity levels, places where there are trapped traders, stop losses, and pending orders, and they're engineering moves to these levels to fill their positions. And that's exactly what the strategy is built on, liquidity. Now here's the best part. This strategy only requires 1 hour of your time per day. Why? Because the highest probability setups happen during a specific time window of 9:30 to 10:30 a.m. Eastern Standard Time. This is when the New York stock market opens, and this is when institutional volume comes in. All right, so the foundation of the strategy is liquidity. What is liquidity? Liquidity is where there are clusters of orders, stop losses, pending buy orders, pending sell orders. It's where trapped traders are sitting, waiting to exit their positions. And institutions need liquidity to fill their massive positions. Think about it. If Goldman Sachs wants to buy $500 million worth of ES contracts, they can't just click buy and get filled instantly like you and me. They need liquidity. They need sellers on the other side of that trade. So what do? They engineer moves to key liquidity levels, places where they know there are trapped traders and stop losses, and they use that liquidity to fill their positions. And once you understand this, you can follow the money. So where are these key liquidity levels? Every single morning, I mark 3 types of levels on my chart. I mark the 8 to 8:15 a.m. Eastern Standard Time opening range. This is the first 15-minute candle of the New York session. I mark this entire candle from top to bottom using the rectangle tool on TradingView, and I mark the midline. This range traps early traders. When price breaks out of this range, those trapped traders now have to exit, and that creates momentum, which further pushes the price up or down. The second level that I use is an untested session high or an untested session low. These are the highs from previous sessions, Asia session, London session, previous New York sessions, that price has not yet touched. There are trapped shorts above these levels, and there are pending buy orders. If price moves up or down to test one of these levels, we watch for either a bounce off of a low or a rejection off of a high. The key word here is untested. If a level has already been touched, it's no longer seen as powerful. We are only trading untested levels because that's where all the orders are sitting that haven't yet been interacted with. The second a level is tested, it's no longer strong. So every single morning, I mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, and then I mark out the untested highs and lows of London, Asia, and New York trading session. And then I wait for one of 3 setups that I'm going to explain to you all right now. So there's only 3 setups that I trade every single day, and that's it. The first setup is a break and retest of the 8 to 8:15 a.m. Eastern Standard Time candle. The second setup is going to be a bounce off of an untested low, and the last setup is going to be a rejection off of an untested high. Let me break down each one for you on the charts. The first setup is the break and retest, and the break and retest is my highest probability setup. Here's exactly how it works. The first step is to mark out the first 15-minute candle on the 15-minute time frame on ES futures at 8 a.m. just like this, using the rectangle tool, and to double click on the rectangle and make sure that you have this midline checked because the midpoint is important. This range traps early traders. Some traders went long at the bottom of the range, and some traders went short at the top of this range. And when price breaks out of the range, these traders are now trapped. The second step is to wait for a break either to the upside of this zone or to the downside of this zone. I wait until around 9:30 a.m. Eastern Standard Time to see which direction price is breaking. If price breaks 5 to 10 points above the midline, that is a clean break to the upside. And if price breaks 5 to 10 points below the midline, that's a clean break to the downside. This break signals that institutions are pushing price in one direction and trapped traders are being forced to exit. Step 3. Wait for a retest of either the top of the zone for longs, the midpoint of the zone, or if you're looking for shorts, potentially the bottom of the zone or the midpoint of the zone. After the break, price will usually have some sort of reaction either to the midpoint of the zone or to the top of the zone. Your job is to identify exactly what that reaction is and where it's going to be. You can do this by going on the lower time frames and seeing exactly how price is reacting to this zone. right here, it was very clear to me that price was failing to close under this zone on the 5-minute time frame. So I waited for one more candle closure and I entered some longs right there, and I was able to catch 18 points off of that specific trade. And all I did was I targeted this London high, which ended up being a perfect target because we reversed right when we got to that high. Why are we waiting for the retest? Because the trap traders who were sitting at that level are now exiting all of their positions at break even. They're thinking, thank God, I cannot get out with the loss. So when price retests the zone, they are buying back their shorts, which further fuels all of the buying pressure, causing price to make a move up. I like to see what part of the zone is being respected. If price were to tap this midpoint and have a few candle closures over this midpoint, I would place my entry at this midpoint. But today it was very clear that price was bouncing at the top of the zone, so that's where I entered the trade. I like to have my stop loss at around 5 to 8 points, giving me a 1 to 3 risk to reward because I usually target between 15 to 20 points. Sometimes if we have news or if this opening range is really big, I'll adjust and I'll have a 10-point stop loss where I'll target 30 points, but I usually like to keep my stop loss under 12 points. So now I'm gonna show you guys exactly what this will look like in real time. So we start out by marking out this first 15-minute candle on the 15-minute time frame, just like that. We then go on the 5-minute and we wait for a break either to the upside or to the downside. Pretty clear that we are breaking to the upside, so we wouldn't have entered right here. We actually would have waited for one more candle closure, boom, and we would have entered right there, and then we're already up quite nice. We're about to hit take profit, a few more candles, boom, take profit, got out of that trade, 1 to 3 risk reward, 18 points on that specific setup. I made around $11,400. I'm gonna show you a few more live trade examples on the break and retest setup. So the first thing we do every single morning is we go on the 15-minute time frame, and then we find our first 15-minute candle at 8 a.m. We take our rectangle tool, we go from the top all the way to the bottom, or the bottom all the way to the top. The only thing that matters is that you have this entire candle marked out wick to wick. Once we do that, we are then going to wait for a break, either to the upside or to the downside. The key thing is you want to see what direction price is breaking to at 9:30, because sometimes earlier in the morning we'll chop around a little bit. I'm not really looking at that. I am specifically looking at what is price doing right when the market opens and all the volatility comes in. So today, pretty clear to see that we are breaking out to the upside. So we are going to look for a retest of this zone for some longs. Let's see what we get. Boom, right? So we are already respecting the midpoint. This is a beautiful example of us coming near the midpoint and then having a candle closure right above it, showing us that price is indeed bullish. So we're in that trade and we are targeting 22 points with a stop loss of around 6 points, giving us a 1 to 3 risk to reward. Let's see how this trade plays out. Boom, there we go, take profit. Obviously, this is market replay and I'm showing you guys trades that I've already taken, but I just want to slow it down to give you guys an exact example of what I'm looking for. All right, everyone, I'm going to show you guys one more example of the break and retest setup, and I think this one will really allow you to fully understand it. All right, everyone, so this is a recent trade that I took that I actually lost on, and the reason I lost was mainly because, one, every trader loses, and that's just part of the game, but if you want to go from a more technical standpoint, I really should have just waited for a little bit more confirmation, because right here, I saw that price was respecting the top of this zone, so I thought that we'd be able to get a decent bounce off of this midpoint, and we didn't. I should have waited a little bit, and if I waited, I would have seen that we were actually disrespecting the midpoint. But I was wrong, it happens, can't win them all. The reason I didn't enter right here was because this actually happened before 9:30 and the volume was very low, so I didn't feel confident getting in while the move was happening before the actual stock market opened. I like to wait for the stock market to open because that's when the volatility comes in, that's when the volume comes in, that's when you actually want to be participating in the market. The second setup is going to be a rejection off of an untested high, and this setup is about as simple as it gets, guys. This setup is very, very simple, guys. All you are doing is you are marking out your untested highs, meaning levels that have not yet been tested. So this would not be an untested high. This would be a tested high because we broke straight through it. This, in fact, would be an untested high at the current moment that we were looking to take this trade. So if we go back right here and identify exactly what's going on, we can see that price is about to hit this untested high after a very large move up and after a beautiful bounce, literally to the exact cent on the 15-minute of this high. So price is pretty much playing ping pong between lows and highs. And now I'm going to teach you guys exactly how to enter when we have a liquidity sweep. So once I have my levels marked out on the 15-minute time frame, I then go and adjust them to whatever the recent thing is, right? This level has been tested, so now this is the untested low, and I like to have my lows blue and my highs black. My buying candlesticks are blue, my selling candlesticks are black, so I just kind of like to keep it synced up. Once price is approaching one of these highs, I drop down to the 5-minute time frame, and I also look at the 1-minute time frame, but mainly the 5-minute, and I observe exactly how price is reacting to this level. So if price is gonna show no signs of respecting this level and it's just gonna shoot straight up, I am no longer interested in this. But if price is going to struggle to break through this level and do something like this, I am gonna be fully interested in taking this trade when we get some confirmation. So let's see exactly what happens. I'm gonna go ahead and slow this down for you guys so you can see what's going on, and we will observe, right? So we tested it, boom, perfect, guys. That's exactly what I wanted to see happen, right? We hit the level, but we failed to close over it in any meaningful way. Even on the 1-minute time frame, we didn't have any full candle closures over this level. I know it looks like we did, but if you pay really close attention, these wicks were still touching this level, meaning buyers were not willing to buy for above this level and sellers had all the control. So what I did is I waited for a few candle closures and I was looking for a potential retest of this level just to get a better entry. I got that, I entered, and that was a beautiful trade for me, guys. On that specific trade, I caught 26 points, giving me a 1-to-4 risk to reward ratio, and I made around $14,000 in around 30 minutes. All right, now we are going to talk about the final setup, and this setup is so incredibly simple, guys. You really couldn't mess this one up if you tried. This setup is a bounce off of an untested low. So it's exactly what we just looked at, but it's the opposite. We were looking at rejections off of highs. This is a bounce off of a low, so obviously we're looking for longs. All right, everyone, for this next setup, we are going to go in market replay mode, and I'm gonna give you guys a live example of exactly how I would have traded this in the moment. So you can see that we have all of our untested levels right here, but these levels just got tested. So now we're gonna look for longs at either this level right here, or we're gonna look for longs at this level. So I'll just put a little green arrow on where we expect to enter some longs, and keep in mind that we're gonna be waiting for lower time frame confirmation. So let's go in the 5-minute and let's see if price wants to react to this level. All right, let's see, we're gonna see very cleanly. Nope. So this is a very clear sign that price does not give a single fuck about this level, excuse my language, but it's very important for you guys to identify when a level is being tested or when it's just being broken through. So this level was broken through. We didn't show a single sign of respect. So we're gonna take the screen arrow away. And now, ideally, we're gonna be able to find some longs at this low. The other thing to keep in mind is that this low is a stronger low because it's from Monday, whereas this low was from Tuesday. The further back you go, the stronger the level gets because the more people that have been sitting in these orders and they're antsy, right? You're gonna be a lot more antsy to get out of your position if you've been sitting in it for, 3 days versus if you've been sitting in it for, 4 hours. So if we can get some lower time frame confirmation, we're gonna go ahead and enter some longs. All right, that's the first thing to see is that we immediately bounced off of that level on the lower time frames. That is a beautiful, beautiful sign. So we're gonna go ahead and get ready to take this trade. If we can get a few more candle closures. Alrighty, there we go, guys. That's enough confidence for me to get into that trade. We are in this trade and we're targeting 26 points with a stop loss of around 8 points. Let's see what happens. Looking good, boom, take profit, right? That was nice and quick, guys. That is the power of an untested low. Notice how when we disrespected this low, we didn't have any reactions, but this low was instantly respected and it gave us a beautiful move up. Your success as a trader will come down to your ability to identify the strength or the weakness of key levels. Let me say that again. Your strength as a day trader, especially if you're a scalper like me, will come down to your ability to identify either the strength of key levels or the weakness. For example, we identified this weakness on that level and then the strength here. We took that trade, we made some money. Also, 99% of your losses with this strategy will be because you failed to identify the strength or the weakness of a level. For example, the loss that I took earlier in the video was because I thought that a level was a lot stronger than it was, and I was wrong. Your losses are likely gonna be for the same thing. So the better you get at back testing, spending time on the charts, and really just doing it, the better you'll be able to get at identifying strength or weakness. Now our job is to identify where we are going to take longs. It's either gonna be here, here, or here. I will say that I'd prefer to take them down here because if we're taking longs right around here, we're still a little bit close to the top of this range, which I don't love. I'd prefer to be taking shorts around here and longs down here. So let's see exactly what happens. Let's go ahead and hit play. Boom. Okay, big market drop so far. So we completely disrespected this level. Looks like we had some news. No signs of life around this level, no signs of life around this level, but if you notice, we are already having a very nice reaction off of this level. So what we're gonna do is we're gonna go ahead and look for some longs right here. We're gonna go ahead and target this level right there. Nice clean 20 points, 5-point stop loss, giving us a 1 to 4 risk to reward. Let's see if we can make it happen, guys. Boom, we're filled. We had another candle closure. We're good to go. We are in this trade. Let's see what happens. Boom, take profit just like that. And we actually could have targeted this next level. And I just want you guys to see just how powerful the strategy is, right? We came down to this key level, rejected off of this key level, came back down, and then rejected off of this level again. One little trick that I'll give you guys is if we blow past a level like this without respecting it ever, sometimes later in the day, price will come back and respect these levels, because remember, there's still orders sitting there, and today we just went through all of them, but we did eventually end up coming back and tapping that, so that's pretty cool to see. You can even see it on the 1 minute that price literally rejected off of that exact level. So why does this strategy only require 1 hour per day? Because the highest probability setups happen during the first hour of the New York session. Here's why. Institutional volume comes in at 8 a.m. Eastern Standard Time. This is not when the stock market opens, but this is when the banks start trading. The New York session is the largest trading session in the world. When it opens, institutional money flows into the market, and this creates movement and clear directional moves. Second, the 8 to 8:15 a.m. Eastern Standard Time opening range traps traders. The first 15 minutes of the session establishes a range. Early traders get trapped in the range, and when price breaks out, those trapped traders fuel the move back up, or in some cases, back down. Third, untested session levels are fresh. The untested session highs and lows are fresh liquidity levels. Institutions know where these levels are, and they engineer moves to test them during the first hour of the markets. After 10:30 a.m. Eastern Standard Time, the market often becomes choppy, the clear directional moves are over, and the high probability setups are all done. So I trade from 9:30 a.m. Eastern Standard Time to 10:30 a.m. Eastern Standard Time, and then I am done 99% of the time. I am not sitting at my desk all day. I'm definitely not over trading and forcing setups. I take 1 or 2 high probability trades, and then I move on with my day. And usually after 12, I am not even looking at the charts. And that's how I made $800,000 last year trading 1 hour per day. All right, before we move on, let me show you the 3 most common mistakes traders make with this strategy that are gonna cause them to actually be unprofitable, even if they think they're gonna be profitable. The first mistake is trading inside the 8 to 8:15 a.m. Eastern Standard Time range before a break. Early in the morning, sometimes traders will try to catch little moves like this inside of the range when we haven't even really broken out. This is a terrible decision because the volume is gonna be super low. A nice little trick that I use to see if the volume is good enough to trade is I go and I double click this candlestick, and then I go to status line. I check this little volume box. I go on the 1 minute time frame to observe exactly what's going on with the current candlestick. And if the volume is under 1,000, I don't trade. The second mistake I'll see traders make is they're trading already tested levels. If a level has already been touched, it's not as powerful. For example, this level, when it was first tested, was pretty powerful. We had a little rejection off of it, and it showed us some strength. And then it just completely became irrelevant. The only reason I'm keeping it up on my chart is to show you that it's not a good level to use. You can see that price doesn't care about this level anymore. It breaks through it, breaks below it, breaks back through it. So we are gonna delete this level and look at the next untested high. The third mistake is gonna be entering too early on the retest. Right here, you can see that if I entered right when price retested this zone, I would have taken a pretty fat loss. But what I did is I waited for price to show me some strength on the higher time frames on the 5 minute, and I saw that strength, so I waited for an actual retest, got that retest, entered there, and then I was actually in a good trade. Whereas if I entered right here, I would not have had, really any luck at all. I would have lost a lot of money. There are only 3 setups: the break and retest of the 8 to 8:15 a.m. Eastern Standard Time opening range, bounces and rejections off of untested session highs and lows, break and retest of the 8 to 8:15 a.m. Eastern Standard Time opening range candle, bounces off of untested lows, and rejections off of untested highs. I trade this strategy from 9:30 a.m. Eastern Standard Time to 10:30 a.m. Eastern Standard Time, and then 99% of the time, I am completely done. I showed you real trade examples with exact entries, stop losses, and targets. Now, if you apply the strategy consistently, you can be profitable. There is no question about that. But here's the reality. This strategy requires you to be at your desk from usually around 8:30 Eastern Standard Time to 10:30 a.m. Eastern Standard Time every single day. And for most people, that is a big problem. Maybe you have a job, maybe you have family, maybe you're in a different time zone. And even if you can be at your desk, you're still human. You're gonna hesitate on entries, you're gonna cut your winners too early, you're gonna revenge trade after you take a loss. I know this because I did it for years, manually. I was profitable, but I was the weakest link in my own system. And that's when I realized, this strategy is not the problem. The execution is, and execution is up to you and you only. So what I did is I automated the strategy. I hired a team of developers and we spent 2.5 years building algorithms that trade these exact same setups 100% automatically. No hesitation, no emotion, no missed opportunities. The algorithms execute every setup perfectly and they run 24/7. And the results? Let me show you. This is the backtest of our main algorithm over the last 5.5 years. You can see that we are consistently profitable, and we started obviously right here, and this green line just keeps going up and up, so we are making money. Right here, you can see that we made $1,587 just today. We took 2 trades. The first one made us $744. Second one made us $856. This is not a demo account. This is not a simulation. This is real money generated by the algorithms 100% automatically. If you want to see the full breakdown on exactly how the algorithms work, the complete backtest results, the live performance, and how you can plug them into your funded account or your live account, I have put together a complete guide. It's linked in the description below. I will break down all 4 algorithms we've built, the complete backtest results for each one, how the done-for-you model works, and how you can start using these algorithms to trade for you. So whether you decide to keep trading manually or you want to see how automation can take your trading to the next level, I want you to succeed. So go watch that video. It's completely free and it might be the most valuable hour that you spend this year. The link is in the description of this video. I'll see you in the next video. Until then, keep learning, keep growing, and stay consistent. Peace.